Radio CIC is a production of Contrary Investors Cafe and is produced for educational purposes only. Opinions of guests do not necessarily reflect those of Radio CIC, Contrary Investors Cafe, its staff, affiliates, or advertisers. Radio CIC does not specifically recommend any investments, nor does it intend for information imparted by guests to be investment recommendations. As always, consult a qualified financial advisor before making any financial decisions.
Welcome to Radio CIC. I'm your host, Tekoa Silva. Here with us today is Trace Mayer, entrepreneur, investor, and publisher of RunToGold.com. Trace, thank you so much for joining us.
You're welcome, Tekoa.
Yeah, it's a pleasure to have you here. You know, Trace, I've been reading RunToGold.com, your articles here. I've been monitoring the site now for a number of years. You produce some absolutely amazing content. So I'm really excited here to get the opportunity to speak with you and hear more about your story. So for our listeners that are just tuning into this interview now, pull up the site, runtogold.com, and scroll through during the interview to take a look at Trace's work. Trace, what I want to do is kind of go back in time a little bit, and I want to learn a little bit more about your story, your background, what made you decide to put this website together, and so forth.
Well, to get directly to the website, mainly I'd explain finance and economics to friends or family, and I don't know if it was because the concepts were so complex and they wanted to learn more, or they just wanted me to shut up, but I had several suggestions. Well, you should put a website up. And being technically inclined, I was like, that's a good idea. I bet I could talk and explain these points and concepts and things to a lot more people than I could do in person, and it'd be a little bit of fun. So that's how I decided to put Run to Gold up, and it's kind of grown from there. It's been quite a fun hobby for me, and that's mainly what it has been. It's been a hobby, and it's kind of my art. I guess some people like to paint and other people like to sculpt. For me, I like to craft these articles and explain finance and economics and money, and because I just have a passion about it, and I really enjoy it. And so that's a little bit about how and why the website got started.
Trace, has running this website had a material impact on your personal experiences, your life, and also along with that, your future at this point?
Yeah. One thing, I've always been, my background, trained in accounting, trained in law. So, it's not like I haven't put in effort and analytical work and things, but it's different when you write for the public. It's different when you craft an article and you put it out there. And after putting out hundreds of articles, where, I've put a lot of work and a lot of thought into them. And as you said, there's great content there, and the market has recognized that. And they've come and they've begun to read. Well, one thing is that I don't always agree with everybody. And so being able to craft, to think, to develop these articles and put them out there, and then have those ideas clash with the ideas of other people, that's where I've really been blessed, because I have to refine my ideas. I have to refine my arguments. I have to get better and more persuasive in how I present things in order to have it be more competitive in the marketplace. And so I've really been blessed by having created these hundreds of articles. About a week ago, I was going back and looking through a lot of the older articles that I had written when I first started, and just to see the growth in my writing ability and in my ability to present concepts and the complexity of the posts and things like that, I've noticed that I've had quite an evolution in my own ability to write and to present the ideas. And so, I've never been illiterate, but writing has never been my strong suit. I'm much more a math guy. When I was in high school, I had to solve a problem and for an entrepreneurial venture I was doing, and I actually derived a form of calculus to do it when I was in my first years of high school. And I didn't know that later until I was in college, but I've always been mathematically inclined and not necessarily as good with the pen. And so that's another way that it's really impacted my life materially, is that I've gotten a lot sharper with the pen. And I kind of enjoy that, because at the end of the day, ideas can only be overcome by other ideas. And it's fun to be out there battling with these ideas in the marketplace. And, the strongest ideas are going to win. And that's a lot of fun to be able to be one of the participants in the gladiatorial pen as opposed to just a spectator. Although being a spectator is fun too.
Trace, your concepts are extremely timely. In a previous conversation, you also mentioned that you have a connection with howtovanish.com. And I've seen a number of the articles, and I've read a number of them on there as well. And looking at your work, you have some major concepts that are in just about all of your writing. The first one is gold. The second one is privacy, freedom, and protection for your wealth. The third, I would say, general concept that I pick up out of it is big interest. You have your central banking financial system, and you have the big companies that all seek to expand their power. So, Trace, can you explain how you came to inherit your views with gold, and then expand out into those other two areas? If I nailed those three general topics.
Yeah, I would say that those hit on some big themes in my life. I've always been, I would say, a good person. If there are two ways to get something from somebody, if I want your tie, for example, we can engage in a voluntary, consensual agreement. I can buy it from you. I could dig a ditch for you, and you could give it to me. Or it could be involuntary. I could, force you to give it to me. I could use a gun, for example. I've always tried to follow the tenet to never use violence against innocent people or their legitimately acquired property. And that's an essential part of freedom, of liberty, of people being able to live the life the way they want to live it, without other people getting involved, telling them what to do, telling them how to eat, checking their testicles before they get on an airplane, doing all these types of things that really intrude on your ability to design your lifestyle the way you want to. And so in order to further that cause of freedom or of liberty, of basically allowing the individual, each of us, to make the choices that we want to make, as long as we don't hurt other people or take their legitimately acquired property in an unconsensual way, as long as it follows those two basic tenets, I think people should be able to do what they want to do and to be able to pursue happiness, as the preamble says in the Declaration. So in order to do that, we have to understand money, because gold and silver, they're not just barbaric commodities, but they're essential checks and balances in the political machinery. They constitute currency, what we use for our ordinary daily currency. It constitutes, in effect, 1/2 of every transaction. And so when we have a small group of people who want to set both the supply and price of that good, it leads to the ability to confiscate through inflation, which is a form of taxation without representation. It's a way to steal the fruits of people's labors surreptitiously. And so that's one reason I'm so opposed to central banking and fractional reserve banking and using the fiat currency as a means of exchange, as legal tender, because it erodes and it attacks the freedom of individual people. And by corollary, it engages in a process of what I call vote inflation. The big corporations, of course, they've got plenty of lobbyists. And what does Eric Schmidt say? Well, the lobbyists write the laws. And so, whether we want it or not, they sell us goods that we don't want. And they steal our money in order to fund the companies and the corporations that do this. If the market really wanted TSA, for example, then it would have provided for TSA. I mean, we had airplanes for decades, and we did just fine without TSA. But now they are able to fund this gigantic bureaucracy with, in effect, confiscated money. And they do it through a form of taxation without representation. And that strikes at the very heart of individual freedom and liberty, because we have to have private property and we have to have freedom of association in order to live the lives that we want to live and do the things that we want to do and just pursue happiness, however we may find it in our own individual life. And another corollary to that is, we should be able to do things without being watched and without being monitored and without every step and transaction being tracked and taxed. And so that's where How to Vanish comes in. That's another site that I co-author with a buddy of mine. We went to law school together, and so we help people take control of their personal privacy so that they can do the things that they want to do without having people always looking over their shoulder and saying, oh, you can do this or you can't do that, and blah, 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 because there are a lot of threats, especially in the digital age, to what we do. If you know that it's going to be kept in a permanent record somewhere, like everything you do, well, you might do things differently. You might not write about freedom and liberty on a website, for example, because that might come back to haunt you. Because, telling the truth in an empire of lies, it can be a dangerous thing. But I think we just need to do what we want to do and do it peacefully, but at the same time, we don't need to feed this machine. And where possible, we need to starve it to death. Don't buy their goods, don't buy their services, don't use their currency, opt out, basically, of their system. And that'll help us as we seek to pursue happiness a lot more. Because when you look at the Western nations, particularly America, why are so many people using antidepressants? Why is everybody so fed up with their life? Why do they not like working at the jobs that they're working in? Well, a lot of it has to do with the fact that they're slaves. They're treated as livestock. They're reared in indoctrination pens, public schools, buying a good that they don't necessarily want to pay for, having that money confiscated from them. Then they work in a job that they don't necessarily want to work in. The fruits of their labors are confiscated through inflation. Yeah, I can understand why a lot of people might be depressed or might not be too happy with the current system. But there are ways that we can change this and ways that we can take control of our own situation, and in doing so, we can protect our privacy. So that's a little bit to expound on kind of the why behind those three major points that you kind of teased out of the writings.
Trace, are there any historical examples to which you draw a lot of similarity here that the U.S. empire is currently in? Maybe it's the Romans or another civilization. Do you see the centralized power here being part of a cycle or part of a ever upward sloping curve?
Well, I think it's definitely part of a cycle. We had, in the Neolithic age, we came out of that into the Industrial Age. When I say we, humanity. We developed agriculture, and that led to the rise of elites. And the elites weren't necessarily bad. They were families that were particularly skillful as merchants or whatnot. Anyways, they arose into governments, and eventually these governments have become corrupted. They used to provide a good service to humanity, but now they don't necessarily provide very much useful service. But we moved from the agricultural age into the industrial age, and that took about 500 years. And it started back in about the 1500s. We made the transition by about by the end of the 20th century. And, a lot of people, they like to compare the American Empire to the Roman Empire. And I think that, there are a lot of legitimacies in that comparison, particularly with, slaves and providing for bread and circuses and things of that nature. But one area where it just really kind of misses in being able to accurately compare is that we now have the Internet. And the Internet is this technological invention, and it's bigger than irrigation, that led to the agricultural age. It's bigger than the Gutenberg press, which led to the industrial age. And I don't think we fully understand how it's going to shift and shape the world. we used to not government didn't play a very large role in most of humanity's existence. And it's really only been in the rise of the industrial age that this nation state as an institution has actually played much of a role. But now, just like the church played a huge role back in the 14 and 1500s, I mean, they used to burn people for treason. I mean, heresies against the church, treasons against the government. But what happened with the Gutenberg Press is the ideas began to spread. Martin Luther nailed up the 95 Thesis. You had William Tyndale. You had this ability to share and communicate ideas. And remember, ideas, they can only be overcome by other ideas. They echo through the corridors of time. They know no boundaries. They can spread all over the world. They're bulletproof. So it's these ideas, they began to spread. And at the same time, you had different economics when it came to violence. Your wealth-generating assets in the industrial age, they were very much tied to geography. You might have a factory or a mine. And so in order to acquire protection services, you needed the ability to project and exert violence on a very kind of large scale. And so that led to the rise of the nation state, because governments are force and force is violence, and the nation states that were able to project and acquire the means and the ability to project force, they grew and became the largest. And of course, the fairly free market system in the U.S., that's what led to the rise and the centralization of this power. However, in the information age, we've got this new technology. We've got the ability to spread ideas faster and more efficiently than ever before. And it changes the economics of this violence. The wealth-generating assets, they're now, for the most part, moving into the cloud. And so with the click of a button, you can move the server from Hong Kong to Iceland or from Iceland to Singapore. This wasn't possible when you had wealth-generating assets like a factory or a mine. Organized labor, governments could tax and regulate. You could extort those holders of capital very easily. In the information age, it's much more difficult because the barrier to exit is so much higher. And this doesn't go just for that. You also have other things like communication. You can encrypt. It's free and open source, but to decrypt the message, in other words, to apply force to acquire the information in the message against the will of the sender, it requires lots of computer processing time and lots of resources, lots of money. So the cost of protection is really low. The return on investment from extortion is extremely low or going negative. And so these things, what this portends is this portends an age where violence will not be as profitable as it was in the industrial age. It was extremely profitable in the industrial age, so that's why we had a lot of violence. But we're transitioning now into the information age. And it took 500 years to complete the transition from the agricultural to the industrial age. But this time, we're going to transition from the industrial to the information age in maybe 40, 50 years. And we're already 15 years into it. And the further we get into it, the faster that transition happens. 5 years ago, Facebook is 6 years old. YouTube, it didn't hardly exist 5 years ago. Now it swings elections. Now we see social media and things like this. We have differing things that just can sweep the globe in a matter of hours. Whether it's don't touch my junk at the San Diego airport, or don't tase me, bro, or I voted. We've got to pass the bill to find out what's in it. It's holding politicians a lot more accountable, and so these changes in the economics of violence that are being brought about by the information age, they're very exciting because they portend a much more stable, peaceful, prosperous world. Now, managing your own personal affairs as we transition into that new world is, I think, going to be particularly difficult. And this is because dying monopolies usually don't go out very peacefully. And, just look at the increased despair that you're seeing from governments worldwide. They're cracking down on this war on terror, which is really just a war on the individual. They want to maintain the ability to milk their cows and turn them into hamburger. But in the information age, cows, in effect, are able to grow wings and fly away very easily. So this is very exciting to see this transition that's happening in kind of the overall big picture.
So, Trace, if I understand that correctly, you have a technology company, let's say headquartered in Zimbabwe, just as an example. So the country comes in and says, we'd like to raise our our income tax on your company from 10% to 40%. And so the company says, okay, give us a 6-month, moratorium. The government says, okay, that's fine. And then within 6 months, they pack up all their shop. They move into the cloud, the technological cloud, as you mentioned, and move their entire operations to Sweden. Afterwards, Zimbabwe, the government has then lost that 10% income tax revenue stream. Is that the kind of negative return that you're talking about in this information age?
Yeah. I mean, that's one example. Bloomberg, they recently had an article about Google. Google pays a 2.4% effective tax rate. I mean, that's kind of crazy when you think about it. Average corporation, pays a whole lot more than that. But it's not even necessarily that the Zimbabwe tech company is going to go and talk to the government about it. They're just going to vanish. They're just gonna wrap themselves in their invisibility cloak and teleport to Hong Kong or to Singapore or to Sweden. I mean, you look, everybody, where'd our top line go? Everybody's whining about the disappearance in the top line, the lack of ability to get sales and stuff like that. Well, it's because the wealth generators, they're just vanishing. And there's a lot more economic activity going on than I think shows up in the actual official numbers, which is kind of exciting. But at the same time, how much does it cost Zimbabwe to go and try to chase those people down and bring them back from Sweden? And even if they did bring them back, how could they force them to actually generate any wealth? It's kind of like from Atlas Shrugged. You go get John Galt, you bring him back, and you're like, well, fix the machine. And John Galt says, tell me what to do.
Yeah.
I mean, when you got these people that have no marketable skills, that have no ability to generate wealth, and the only way they survive is by exerting violence and force on other people and stealing their property. I mean, because that's what they are, even though they're strutting around in their costumes. They aren't actually able to do anything on their own that's productive. That's why they go and work for the institutions or organizations that they work for in governments. So they can't actually generate that return on investment. And now, more than ever before, the ability for the holder of capital to just vanish from jurisdictions where he's not able to enjoy the fruits of his labor, that's increasingly available. So we're seeing that the jurisdictions that treat capital well, both human and economic capital, they attract more of it. And the areas and jurisdictions that don't treat it well, that's where people vanish from. So it's very exciting to see these changes happening. And I mean, we see it in the headlines. The Illinois, the DMV got evicted for not paying rent. Well, where are the people who are generating wealth in Illinois? Well, they've probably vanished to Florida or some other jurisdiction where they're treated a little bit better. So this is exciting, and people, they still have the ability to vote with their feet and to vote with their dollars and their money, and that's what they're doing increasingly.
Trace, I hadn't seen any other articles on the internet that took the LeBron James story and positioned it in the way that you had in terms of Florida offering the the preferable tax treatment of no income tax. How much of his decision was due in part to that? Because I know that he's a smart kid. It's funny to say kid. The guy is like 8 feet tall.
Right.
He's a smart guy. I mean, I believe he's consulted with Warren Buffett in the past on some of his negotiating decisions. He knows what he's doing. In your opinion, did that play a big role in that decision?
Well, of course, we'll never know because that's in LeBron James's own heart. But when you do the numbers, like we kind of showed in that article, it comes out to millions and millions of dollars. The difference between Ohio or New Jersey and Florida, and that's an example. They want to keep this particularly productive cow. But he grew wings and flew down to Florida, and how when you're a holder of capital, what benefit is there from staying in Ohio or New Jersey or California or the United States as opposed to the cost? It becomes just a simple economic calculation where you're calculating the cost benefit analysis, and I think in LeBron James's calculus of that, it just made a whole lot more sense to go to Florida. Just like Tiger Woods went to Florida, and just like Google goes to the Netherlands, to help with their 2.4% effective tax rate. So, I mean, I don't know exactly how much of a role it played, but I would say that it was probably the defining factor for him. And that's interesting. At the end of that article, we actually have a product, Bill and I do, where we help people choose their tax domicile. Because there's a couple legal tests that go into determining where your tax domicile is and where you land. And most people, they don't really take much thought about that. But if you're earning over $50,000 a year and it's fairly location independent income, just with a few little tweaks to your situation, you can, in most cases, completely eliminate that $3,000 to $5,000 a year of tax that you're paying. And so, why not do it? And it's increasingly easy to do in the information age. So I think LeBron James did it, and I think that there are a lot more ordinary people who didn't have this ability to do it before, but now because of the internet, they do have this ability. And I think they're taking advantage of it. You look at New Jersey, for example. They raised their state income tax, and $70 billion of net worth moved out of the state. So those cows just grew wings and flew away. And now New Jersey doesn't get to milk them. And what would New Jersey's return on investment be from going and trying to get the cows and bring them back so they could milk them? It would be hugely negative. This is another example of how decentralization is actually at work in the information age.
Trace, I've seen information out there that suggests that when a government reduces its tax rate, it actually attracts more business, which leads to higher tax rolls coming in. And I want to go back to a concept that we talked about just a few minutes ago about a country trying to keep trapped, I guess we could say, the cows. We've seen a few countries out there in the world that restrict their citizens from moving about. They can't leave the country. And I'd like to ask what your opinion is there in terms of the likelihood of countries shutting down the internet, shutting down this process of integration into the information age, and choosing to take a step back into the industrial and agrarian ages just to keep control of the cows.
Yeah, well, they'll definitely try to do it. I mean, North Korea is stifled in 1940s and 50s technology. Myanmar, China, the United States, how much technology is classified, for example. I mean, we're probably living way beyond, way behind where we probably could be if we weren't feeding these parasitical extortioners. But I think that the long history of humanity's journey from the swamp to the stars, it points to one thing, and that's that man will be what he was born to be, free and independent, to quote John F. Kennedy. And I don't think that there's much that governments can do worldwide to stop this general mega trend. Sure, they can clamp down on their own cows and try to increasingly extort them. What do you think the Patriot Act is? You know, a third of it is relates to financial institutions. You could call it the Cash Flow Control Act. It's to keep capital in the dollar. Well, what about all these new reporting of foreign bank accounts and things like, and financial accounts and things like that? All of this is designed to keep track of the cows wherever they fly around the world. But it's becoming increasingly apparent that the cost-benefit analysis for being a U.S. citizen, for example, is just not where it used to be. And so the time it takes to process your certificate of loss of naturalization, that's when you renounce U.S. citizenship, the time is jumped by like 3 or 6 months because so many people are leaving the United States in the sense that they're renouncing their U.S. citizenship. And so I think that we're going to see an increase in the, you could say, commercialization of sovereignty. I mean, I believe sovereignty's always been in the individual, but I think we're going to continue to see this decentralization, whether that's through citizenship by investment programs like you have with Dominica or the St. Kitts, or Montenegro just announced a new one in August, and Bulgaria, for example. I mean, you can invest in Bulgaria and you can have an EU passport in 5 years. You can have permanent residency pretty much immediately. And so, you know, there are going to be those that try to clamp down on the cows, and that just opens up the market opportunity to say, hey, we got greener grass over here. Come over here. We won't milk you. Just give us a little bit of money, and you can graze in our pasture, and we give you tons of room and lots of green grass to eat. And eventually, through this process, I think we're going to see either the complete collapse of the nation state as an institution, or it's going to be drastically reduced in its size and scope, and mainly because they're bankrupt and they can't generate a profitable return on investment. So they're going to starve to death, and they're going to eat you know, it's kind of like a snake eating its own tail. The more they try to clamp down on the cows, the more enticing it is, and the more cows they incentivize to leave, and the more of a market they create for other people to welcome the cows and to dangle before them reasons why they should leave and make it cheaper to do so. So I think it's kind of, you know, that they're just hastening their own collapse through passing things like the Patriot Act and trying to clamp down on UBS, etc. So yeah, I think it's kind of funny to watch the desperation in the politicians' actions.
For our listeners, Trace, you've published a book called The Great Credit Contraction, and that can be found on runtogold.com. And along with it, you published one of the most fascinating charts that I've seen out there on the internet that deals with gold and allocation to it. And I want to talk about that. I want to get your big picture view here on total world assets moving into gold and what that could portend here for the other major asset categories like real estate, U.S. stock market, bonds, and so forth.
Yeah, well, the liquidity pyramid, you can find it right on the homepage of Run to Gold. There's approximately $2,000 trillion of worldwide asset values. Actually, a lot less now than because a lot of it's evaporated. What's happening? Capital is moving down that liquidity pyramid out of things like mortgage-backed securities or auction-rate securities or derivatives, moving into safer, more liquid assets like the Dow or treasuries or gold and silver. And a lot of it's moving to treasuries of, you know, whether it's German bonds or U.S. bonds or Australian bonds. But eventually it's going to move from that into the monetary metals. And what's so kind of exciting about this transition is that the fiat currencies, whether it's the yen or the dollar or the euro, they represent the common stock of those institutions or organizations. They're kind of like bearer bonds. And so because gold has broken out against all major currencies over the last 10 years, what that portends is the decline of their business model. It's not as profitable and lucrative to be engaged in the violence business as it used to be. At least that's what gold is saying when you price the common stock of these organizations that are engaged in the violence business, like the United States or Europe or Germany or other nations. So as capital continues to move into that safer and more liquid assets, it kind of hastens the rate at which this liquidity pyramid continues to evaporate. And then the more people who want to move more of their capital down. So kind of the faster it goes, the faster it goes. And so that's generally what's happening. And right now, gold and silver, they're not used very much in ordinary daily transactions as a currency. Most people don't even hold any. And so we're just in the very beginning stages of this giant transition to a world where the state, the nation state, is drastically reduced in size and scope. And as a result, people don't use their common stock anymore. They don't want to hold it because it becomes increasingly worthless because the return on investment from that enterprise is negative and going lower, just because that's the general market trend. I mean, who wants to hold newspaper stocks right now? Anybody who's held stock in newspaper companies over the last 5 years have just been decimated. And the reason is because in the industrial age, newspapers were very profitable as a business model. But in the information age, there's been a lot of creative destruction. And the newspapers, there's a lot of inertia in organizations, and change isn't mandatory. You can go extinct. And a lot of newspapers have chosen to go extinct instead of change. And we're seeing the same thing with governments. They're choosing to not change, and as a result, they're probably either going to go extinct or starve themselves to death, or at least starve themselves enough that they're going to have to eventually, change before they completely die. So I think that's kind of exciting too. It's becoming increasingly profitable to choose freedom as opposed to tyranny. And that's essentially what the fight between fiat currency and gold and silver and other commodity-based currencies is. It's the fight between tyranny and freedom. And which one do you vote with the fruits of your labor?
Trace, what has your work shown in terms of gold being repriced as a total percentage of worldwide assets? I know when we look back towards late 70s, early 80s, it constituted a much higher percentage than it does today. What do you think we would need to see here for that previous peak to be met? And in your opinion, could we see something higher afterwards?
Yeah, I definitely. We have to see a higher gold price. The market's going to force it, and where it goes, actually, we could see 4,000 to 11,000. That might prolong the current system a few years. We might need to see 50,000 U.S. an ounce. If the bull kind of gets a little out of control. The major issue here is that central banks carry gold in the vault, and gold out on loan is the same line item. In effect, they're reporting cash and accounts receivable as the same thing. What they've done is they've naked short sold gold. And they've done this not necessarily, when you see price suppression, this is very weird because it's done not by users but by owners. And it's not done for the obvious reasons. It's not like pork bellies or potash where if you use those, you would want to keep the price low because that's the cost of your input. In this case, the reason they want to keep gold and silver low is because they pose a mortal threat to their fiat paper franchises, their monopolies. So they want to keep the gold price down. So they've been leasing the physical metal into the market to meet the deficit between mine production and demand. And they've been doing this for, about the last 100 years total. But now the market's saying, you know what? Put the bar on my truck and I'm going to drive it away. And so the central banks, they have only maybe a half to a third of the gold they claim to have. And increasingly, the gold is getting into private hands. Last year, there's more gold in private hands than public hands. And we know the rule: he who has the gold makes the rules. And so it's very exciting to see the gold and the silver just flying off the shelves into private hands. People are exchanging their little colored coupons that are just figments of their imagination. They're exchanging them for something real and tangible. And right now they're doing it only as a form of insurance. But eventually, I think we're going to see holding of gold and silver as doing it much more for currency reasons and using it in ordinary daily transactions. And that's where it if we use gold as our cash balance. I mean, you take just the five major oil companies, and you take just their current assets, BP, ExxonMobil, Chevron. You take 1/3 of 1% of their current assets, and they could buy every single gold ounce that's available for delivery on the COMEX. Annual worldwide production of platinum is about 7 million ounces a year. That's about $7 to $10 billion at current prices. There's $13.5 trillion of bank accounts insured by the FDIC. What if everybody was holding their bank accounts not in dollars or euros, but in gold and silver and platinum and palladium? And that's what we're going to see happen in the information age, because the cost is a lot lower. The ability to extort and steal your capital is a lot harder. And so people, to reduce their costs and to reduce their risk, they're going to move their cash balances into the monetary metals. For example, if you had $1 million of capital in 2001, your store of capital expense holding in gold would be about $500 a month for vaulting and insurance. You hold that in treasury bills, it's about $1,500 a month. So you pay 300 times as much for that line item expense of store of capital expense. Like, where do I store my excess cash? And that's very expensive. Why are people paying it? And for the most part, it's hidden. It's not like it's right there on the income statement in the expense section. Like, you paid this much in store of capital expense, to hold your money in dollars or euros. We don't really see it that way. But if we did, I think a lot of people would say, you know what? I don't want to pay that extra $1,000 a month by using the dollar instead of using gold. And they would move, their capital into gold because it'd be cheaper and more effective and less risky. So we could see some really big changes, especially in dollar terms. And right now, 10 years ago, you couldn't say gold in polite company. And now you have the president of the World Bank writing an op-ed in the Financial Times about it. And so there's going to be a change in attitude. And the holders of capital and managers of money, they're going to force, through market forces, they're going to force much more accountability. And gold, I think, and silver and the other monetary metals are going to play a prime role in that. And eventually we're going to be seeing balance sheets denominated not in dollars or euros, but in gold. Like, I already do it from a managerial accounting standpoint. I use gold as the numeraire to find out, whether my net worth is increased in gold ounces or not. And I think we're going to see that practice spread, especially to more sophisticated money managers. Like John Paulson's already doing it. He's got a hedge fund in gold, denominated in gold. We're going to see that increasingly spread, that practice, because you can't reliably measure wealth with the dollar or the euro or the yen, but you can with gold. So that's the role it's always played. And so that's another thing, that's kind of driving this.
Now, Trace, how can our listeners find your work, support it? How can they get a copy of that the Great Credit Contraction book?
Just come to runtogold.com. As I said, it's mainly kind of a hobby. So, just read the articles. If you like it and want to support the site, buy the book. The book will actually be helpful for you because the site's not free. Got to pay for hosting and other stuff like that. And if they want the latest updates and things like that, then they can subscribe for the email updates, and those are free also. So I'd really recommend that because I've gone and found, some of my best articles and I've put them in there so that you get some of those best articles automatically emailed to you. And they're fairly evergreen. They're not the articles on the current price, like where's it's going to go, but they're much more, they tease out the monetary science and the economics. And then, hang around and look at the site because occasionally I'll say what's a good value or what's not. And if people follow that advice, then they usually make a lot of money too. For example, I was on BNN and I said back in 2009, I said, gold would go to 1,300 an ounce in 2010, second quarter, and it hit 1256. Went from about 1050 to 1256. So if people had followed that advice, traded some traded some of the gold, that they could have made quite a bit of money on that, quite a bit of profit. So there's quite a bit of advantage to going and kind of hanging around Run to Gold. You'll learn a lot about kind of the mega trend, but also occasionally you'll get applicable action that you can do.
Trace, what's your view on gold for 2011?
I think it's going to go higher. January, February, probably peak, maybe peak in March. Then we'll have a correction probably through the summer. And then I think it'll start moving up again in September, October, November. And very well could see 1,500 an ounce, maybe 1,600 an ounce. Assuming things don't get really crazy. If it gets really crazy and the insurance begins performing, and actually it has to a little degree, I think it could get out of hand and, maybe 2,000 an ounce or something. I don't think we're going to see a general systemic collapse like hyperinflation or anything. I don't think we'll see that for a long time. There's a lot of inertia with the current system. It took 500 years to build. It's not going to go down in a year or two. But it could, which is why you'd want to have gold. But I think the probability of that's very low. So, just kind of my general advice would be find cash flowing businesses or free up your own cash flow. And with that excess cash flow, purchase the metal on a monthly basis. Just keep acquiring it because I think it's tremendously undervalued. And there's, but it's kind of a little expensive relative to other asset classes when you look in the short term. But if you look over that 5, 10, 15-year period, I think it's tremendously undervalued. And there's not really any better place, I think, in terms of safety and liquidity to be, given all the uncertainty and the political unrest and risk that we're going to be facing. So I'd say, just keep stockpiling it away. And then when it gets expensive, that's when you can trade it for real estate or for stocks, But for now, I think get high cash flowing stuff, assets, and then just start piling that into the metals every month, looking for additional deals like that to do.
All right, well, Trace, thank you so much for sharing your comments. It's an absolute pleasure to speak with you. For our listeners, again, visit runtogold.com to follow Trace's work. Trace, I'll see you again next time.
Okay, thanks.